All right. Hello, everyone. Welcome to the Friday closing playbook. We're a few minutes before start time. I'm going to go ahead and just do some pre show preview for those that are here early. If it's your first closing playbook, welcome. This is a free daily webinar that we do. It's kind of fast paced because we typically try and take a handful of trades during the session in the last half hour of the trading day. Any trades that we take, they're a little bit more speculative than our typical trades that come out in our official trade programs. So take them with a little, uh, you know, caution and know that there's a little bit more risk involved on the trades that we take during the session. We also try and recap the day, talk about what we're going to be doing in the next trading day, occasionally have some special guests and stuff like that. When you come to join the chat, don't click on the login here link. Just put in your name and click join. If you want to give yourself a little more space on the screen for the presentation, you can click on that hamburger menu, those three lines at the top of the interface, to shrink the column on the left and give you a little bit more real estate. In the lower left area below the video, there's a speaker button. That's your mute unmute button. And in the lower right, you have two icons for controlling how big the presentation is. The double arrows will make it full screen and cover up everything else. And the box in a box icon is for picture in a picture. That will make it a small floating video so that you can do something else in the background, like go to your brokerage account or go to a web page or something like that. It doesn't work on every device or every browser. We recommend trying Chrome. That seems to be the most successful for people. So you may have that picture in a picture option and you may not, depending upon the browser and device that you're using. Underneath the video, there's a slider. If it's yellow, it's on. If it's white, it's off. And we suggest you put it to white. You don't need the low latency. Turning it off will give you a better quality picture and audio. And lastly, if you want to send a private message to any of the hosts, that being me, Nathan, or Graham, you can find any of our chat messages in the group chat, hover over that message, and click on the double speech bubble icon that you see there, and you can send us a private message that only that host will see. Now, we do have some exciting news for those that are interested in seeing replays of the opening and playbook sessions and sometimes have trouble finding them. We did actually get a little ahead of schedule. Weren't planning to have this out till next week, but we're able to finish it today. The same URL that you were going to that only was giving you the last opening playbook and the last closing playbook will now give you a good number of recent videos that are clearly marked by their date. They're in date order, and you have both opening and closing playbook in there. So when you come to the page, it'll look something like this. The latest video will always be featured at the top. You can just click start watching if you want to, or you can scroll down below and find the date of the video that you want and click on the video to watch it. So exciting news when it comes to watching the replays. Now, if you want something much older, you'll have to go to the old YouTube channel. So again, looking at the list of helpful links that are in the announcements under the video, the first link is the link to get into this room for opening and closing playbook. The second link, latest opening and closing playbook replays, is the link we were just looking at. NMC-replays will take you to the most recent, like, months worth of videos. And then if you want something older than August of this year, you're going to want to go back to the old Financial Wars YouTube channel and try and find it there. Also, we have other links that are in here that if you haven't taken them already, go ahead and grab them. The daily scan email, Telegram, and all of that kind of fun stuff. So I know that Nathan is finishing up a session over in his Tucci Trading headquarters class that he's doing right now. So he should be with us in a couple of minutes. But in the meantime, just to talk about some of these links that might be helpful to you. The Dollar Playbook VIP membership, if you're not a member of that, you should be, because it's only $1 and it gets you a whole ton of resources that are related to the opening and closing playbook sessions. And then there's some other helpful links down here for you as well. So again, Uh, take these links if you don't have them already, so that you can get to them anytime you need to, and check out that latest replays page that we just looked at. Coming up today, as usual, we'll review the day. Nathan's going to be talking about the box trades that he mentioned already in a previous session, and we're going to take another look at some seasonal trading opportunities. And here he is, the man himself.
Hello, I feel like I haven't seen you in so long, Dave. All right. Well, let's jump in. I actually don't even have the chat open yet. I'm bouncing from meeting to meeting, so I'm
yeah, all good. Yeah, I have that that new replay page live. We can maybe go into it after everybody gets into the room.
Oh, nice. Okay, yeah. I pretty thrilled about that. I think everyone will be much better off in navigating that. Okay. Why is my microphone side? It's making me look short. Maybe I'm slouching throughout the day, Dave. I'm getting shorter. Okay. Well, let's first just take a look at our Shotgun Thursday final. Well, I shouldn't say final because it's 3:32, but almost final results here. So there we go. We had a couple actually close out, which is kind of a miracle with how ugly this day is. So the good news is, even though today was a horrible day, we are beating the SPY equivalent, because the SPY equivalent, you would have lost all of the capital for that one-off trade like I did in overnight options today. But with this, we've got a couple winners. And actually, we even have the IWM that's up a bit. So I can probably see if I can close the IWM, because that one we obviously didn't put a closing order as a hedge. But now that we're getting toward the end of the day, we can probably go ahead and close it. What's the IWM at right now? Let's see. It is at 234.56. So we're kind of right in between. So we should be able to get about a 50-ish fill, maybe 47. All right, so we'll see if that gets filled, because that would technically, not to brag or anything, but that would give us 3 winners as we lose money overall today. So we'll see if that one gets filled here in a minute. I was just upstairs grabbing a quick water between classes, and my 18-month-old is really learning how to throw fits. She's at that stage where she really has figured out the dramatic fit throwing, where if she doesn't get something, she whines, but then she like kind of catapults herself onto the floor. And it's just, a very dramatic, sprawled out situation. And so I told my 18-month-old daughter that, I felt the same way today, given where the markets are right now. So we can all relate, but it is definitely ugly. We're down about 0.7%, I think, still at the latest. IWM was actually holding up a little bit better and then push lower, which might help us get filled here for a couple bucks. But AMD down 3.5%, which is one of my holdings. The MAG's down 1.4%. And then obviously the Q is taking a bigger hit because of, those tech stocks driving, and XLK being down about 1.6%. Now, what we've seen over and over and over again is that this market has been really resilient. It has, got filled in our IWM. Well, there you go. It has been really resilient over time. So as Graham mentioned before, it's actually the best year to buy the dip after a down day that we've seen in like 20 years or whatever his data was. I forget exactly which one it was. But that is kind of the environment we found ourselves in that makes me tempted to think, hey, maybe we should buy. But instead of just buying outright for our big trade, we're going to put that box trade on, because if the market does bounce and get going up in the right direction, we're still going to win. And if this is a sign of a deeper correction, then we're still in great position to win. So that's where we're at now. Let me see if I can flip over here real quick. I just want to do a very quick review, because we're going to, as always, be short on time with the closing playbook session. Just a very quick review of this box trade idea, which is that if we put a box around current price and give it the month to move out of there, over time, it tends to be outside of that box a high percentage, like it was in July, in June, here back in May and April, here in March, here in February, here in January, December, November. October here was really the only month in the last 12 months that if you set it on a 1 to 1.5% box on either side, that it was going to stay pretty close and then end up inside that box. Even some of these months, like August, where it broke below and finished above, you still get a win. Same thing in the previous August here, August and September. Sorry, not July and August, but August and September. And so that's really what we're going for. Now, the critical thing here is that for most of these months, the VIX is a little bit higher. Now, of course, perfect timing, did bounce a little bit today, but it was a little bit higher during most of these months. And so you would not have got a great risk reward to trade that quote unquote box trade. You would have maybe made 15, 20, or 25% for the net profit at the end of the month. But because the expected move has been quite low, we can set the box trade, as I call it, or the two-way trade, and still get a pretty decent ROI. Now, I don't know what the ROI is because we haven't actually looked at it today, but that's what we'll be looking at to see what we can get. So what is a box trade? Well, what we're going to do is we're going to look at the price action here. We're going to have one line up here that represents the SPY needing to go above that level in order to be a win on the bullish side. And then we're going to take a line and put a bearish debit spread somewhere down here that says that the market has to go below that line to be a win on the bearish side. And the idea here is actually relatively simple. Whatever your spread distance is, let's say it's a $1 spread, if you can get both sides filled for less than the value of that spread, for less than $1, you have some profit left on the trade that will either hit on the upside or the downside if it moves outside of that box. Okay, for example, you pay 40 cents for a bullish debit spread and 40 cents for a bearish debit spread. So in total, you spend 80 cents. Well, if it finishes above this line, it's worth $1. And if it finishes below this line, it's worth $1. Therefore, your 80 cents turns into $1 and you make a 25% ROI. And that's what we want to do here with this box trade. Now, most people do this by putting an even amount of movement on either side. So they'll go $10 above price and $10 below price. I think that is a poor way to do it because I think you get a better result if you put a lower level on the top and a bigger level on the bottom. So you keep the width the same. Maybe the width is $20. We'll take a look through the option chain and see what we can get here. But the width might be $20, but instead of being 10 and 10, it's 7 and 13. Okay. And that gives you the ability where even in a slow grinding market, you still win. But if you get a big, ugly drop to the downside, you also win. So the idea here is that you get a protective trade that still wins in a bullish market. Okay. Protective trade that still wins in a bullish market. That is what we are going for. All right. So we are going to pull up our chart. So guys, we're going to give this a month, by the way. This is a month-long trade. We're looking for it by the end of this box, October 1. I don't know if October 1's a weekday. Is it? Yes, it is. October 1 to finish outside of our box here. So let's go ahead and look at the actual option. Now, I'm going to use SPX, by the way, but you guys can mirror this trade with XSP. All right? Because it'll be the same concept. It'll just be a little cheaper to do it with XSP if you want. Now, I do it with SPX because I want to put a couple extra contracts, saves you commissions and stuff like that. No weekend trade. We do not do weekend options on holiday weekends. Sorry, I mentioned that in opening playbook, but I didn't repeat it on the closing playbook start. Okay, ready? Everyone's okay. Should be seeing my broker. Okay, so we're going to go to October 1st. That's 33 days until expiration. Now remember, we're going to create a box on the upside, and we're going to create a box on the downside. Now, ideally, I would only go about 0.5% up and maybe 1.5% down. But I don't know if that's going to give us enough ROI. We have to look at the actual options to see what kind of ROI. So 1% to the upside would be about 65 points. So what's that? Someone help me with some math here. 65.70? About 65.70 to the upside. So, of course, for some reason, 65.70 seems to be the only the only strike not showing up. What are the odds? All right, we're gonna have to go with 65.75 apparently. All right, so there we go. 65.70, 65.75 would give us a about $2 mid price. So, oh, sorry, I said it backwards. 1.5 to the upside, 2.5 to the downside. Sorry, guys, I 1.5 to the upside, 2.5 to the downside, because we're giving this an entire month. So that's about $2. It's actually a little more expensive now. I guess the VIX being up even just a little bit has impacted that. But I don't really want to go a whole lot higher than 1.5% to the upside. Let's go ahead and check our downside. Well, here, let me pull up the calculator because I'm just inventing numbers right now to get a baseline of a trade before we move it, but we might as well start with real numbers. Okay, 64.60 times 1.5. Wow, nailed it, Nate. Really good. 64.60 times 1.015.
That was 1% above and 2.5 below.
Okay, 65.56. Thank you, Jeff, for being way smarter than me and figuring that out. 65.55. So we're actually even higher than 1.5% and still getting $2. So we're definitely going to have to go higher than 1.5% to the upside. We'll have to at least be into the 70s just based on this price that we can see here. But let's look at the downside first, and then we will make a move. I might actually go to the Qs if I can't get a good enough trade here. We can compare both. So then we're going to take the same price and we're going to go 64.60 times 0.98. So 63.30-ish going to be our downside for 2% to the downside, 63.30-ish. And of course, they seem to have way less strikes on October 1st than other expirations. I don't know what the deal with that is, but let's see if we can actually get a 63.30 strike. Okay, we can. So look how, wow, the downside are cheap. Okay, so I started at just 2%, which I thought might be a little too low, and it gave me a very cheap option. So I recant what I said. We can actually get in pretty nicely here because the downside options are priced quite cheap. 2% move is being priced about a 400% ROI. That is wild.
What'd you say your standard is 1.5 and 2.5, or 1.5 and 2?
Well, it just depends on the pricing of the options. Ideally, you'd actually go like lower than 1.5 to the upside and let a slow grind get you a win. But you're not really going to know until you actually look at how the options are priced. So, for example, if you look at them at one at a time, if we just go 100 points up, we go from 64.60 to 65.60, which is kind of where we're at right now. 65.60 on this one. That's a $10 spread priced at 430. Okay. So basically you're looking at, around 1-to-1, about 100% return for 100 points up. But if we go 100 points down to 63.60, it looks like they're going to be a little bit cheaper on the 63.60 side. Let's scroll on down here. 63. So 430 for 100 points up 220 for 100 points down. Okay, Dave, tell me as someone who's not in the weeds, does that make sense to you, or am I'm trying to give a light bulb moment here, but to me it's like, oh, that's obvious, but maybe I'm not as obvious as.
I'll be honest, I was typing something and not looking, so do it one more time.
Okay, so to bet that the market's going to go down 100 points on the SPX, the price of a $5 spread is $2.20. At the exact same time, to bet that the market's going to go 100 points up, the $10 spread to the upside is $4.40. So your return is about 400% for the 100 points downside and about 100% for the 100 points upside.
Yeah. It's imbalanced for sure.
So for me, that's why, to answer the question, do you like to go 1% up, 2% down? You don't really know until you actually look at what the bias is and what the, kind of what the future pricing is.
Yeah.
So the good news is we can get really cheap by putting a little downside, exposure on there. We're going to get really cheap to the downside. The bad news is to make it conservative on the upside is going to be really expensive, right? Because if you go like, oh, I only want to go 0.75% to the upside, you're going to be paying almost the full value of the spread. Yeah, exactly. They're basically saying, hey, there's a big upside bias right now because the same 100 points is not just twice the price, but actually 4 times the expected ROI. Gina, good idea. Let's take a look at the September 30s here.
For the couple of people that are asking, yes, you can use XSP. You can always do it. The strikes are going to be a 1/10, and you just need to look and see the widths are going to be different.
Let's do the same 100 points. Gina had a great idea. Let's do the same 100 points, 65.60 to the upside here, 65.50, 65.60. Similar pricing. Let's do the same 100 points to the downside, 63.60, 63.70, 60, 63.70. Very similar, but more volume. All right, Gina, we're trading one day, but I like your idea. We're gonna use the quarterlies because they're gonna have more volume. It didn't even occur to me that the day before would be a quarterly option. All right, so let's do a couple combinations here. No trade yet, guys. We're gonna do a couple combination, and basically we're gonna see which box do we like the best for the relative ROI. There's no trade yet, Karen. There's no trade. We're just looking around at the options themselves. I'll let you know when there's a trade to see what kind of ROI can we get relative to the box. Now, remember, I want to go with as little upside requirement as I can, but right now the upside is being priced very expensively. Okay, so I'm not going to be able to get really close to the price and kind of imbalance that box as much as I would like. Let's go back up to those 1.5%. So those 1.5% were, let's see, 360 times 1.015, 1.5%, 64.55. 64.
Nathan W. The odds are going to depend on the particular ticker as to how often it does end up going outside the box, and then also, where you put the strikes and everything. So it's going to be different for each one. But if you have about an 80% hit rate on these types of trades, and you have about an 80% hit rate on a lot of Nathan's other strategies, then it doesn't necessarily tell you where to put more money on which trade. It's really going to be up to you how you want to, and that goes back to what Nathan's been talking about with planning your strategies and how you want to diversify your trades and how many trades you want to be into and all that.
Yep. All right. So the upside on SPX is about 65.55. I don't really want to go more than 1.5% to the upside. I would actually like to be a little bit lower, but we're not going to be able to get much lower and still have enough ROI. The good news is the put side is so cheap that our net ROI is still going to be really, really good. Okay, so then let's go. I'll go a little bit more than 1.5% to the downside. I'll maybe go like 1 3/4. Let me run that real quick. So 64.60. That would be times 0.985. And that would give us about 63. Downside about 1.75% is going to be right around 63, 65, at least rounding it to the closest 5. So we're going to go here and find the 63, 65. And we can buy that for pretty darn cheap. So if we can get into this one, if the spread's a little wide, and actually not horrible, if we can get into this one for about 325, our ROI is going to be really good. Let me go ahead and type that one, and that's what I'll try to get in. I'll try to get in at 325. Now, if our ROI is 325, let's just pull up our calculator. Oh, hold on. I got to log in. Wow. Not even going to let me in my own calculator until I log in. All right. I guess that's good. I guess that means the authentication works.
Yeah. No backdoors for you.
Yep. All right. I will share my screen real quick. And boom. Okay. And then we open up the calculator. And then what we can do is we can just use any kind of $10 or $5 strike just to put the instance in of 325. And you can see our profit potential for holding until expiration. Oh, shoot. I forgot it doesn't automatically flip. There we go. $5 spread paying 325. Our hold till expiration is 53.8%. All right. So that's what we're going to do. I will now post the trade in, but I wanted to do this in this order on purpose because the first thing you should know is how much do you stand to make? What are the conditions before you're actually making the trade? So let's go ahead and now add the trade into the chat. This would be, most people call this a reverse iron condor or something similar, but it just depends. So let me. Oh, why is my thing just got wonky again? That was weird. 65, 55. And then 63, 65. There we go. That's the trade now correctly thrown up on my screen. So you would buy to open the SPX September. Great call by whoever said to do the September 30th. Definitely got more liquidity there. 65.50 call. You would sell to open the SPX September 30th. And you guys could replicate this in XSP if you wanted. Obviously, the numbers would be smaller and it'd be like a $1 spread. Buy to open the SPX September 30th. 63.70 put. Sell to open the SPX September 30th. 63.65 put. Now, this is what I would call a two-way trade or a box trade or something like that. Basically saying price has to move outside the box in order to give us the potential. Wow, the mid price is going real wonky. Now, make sure you use a limit order. Do not just pay whatever it's asking you. I'm actually going to try to go in a little bit lower because this thing is bouncing all over the place. And I'll see if I get filled at 320. If not, I'll crawl it up a little bit. But this box, so if we just go back here, I'll share my other tab. If we just go back here, we can now draw our box on where it is. So basically, we're going to have, I'll go to actual XPX so you can see. We have a line up here, okay? This line up here at the top level, 65.55. And then we have another line at the bottom side, right? And that's at 63.65. And what we're doing is we're giving the market the month to break either up or down. We get a correction down. Now, you can use a target on this. You could use, what I would do is I would use almost the full value. So if you're using a target, you would use a target of like $4.90 on the SPX. That would take your ROI down to maybe like 40%. Or you could look to let it expire. Now, if you use the XSP or the SPX, you can let it expire without really being concerned about exercising or anything like that, because there is no exercise on XSP or SPX. So you can do that, or you can set a target, either one. But what we're looking to do here is let this move over the course of a month. And usually, as we saw before, the market's either going to have a directional move up or down, and either one will work for us as long as it's below that bottom line or above that top line. All right? Does everyone follow the concept? Even if you haven't traded 4 legs yet, and maybe you're not ready to actually follow the trade, does the concept make sense to everyone? And by the way, guys, that pricing is really important. You can't just go in saying, hey, I'm going to trade 1% above price, 1% below price. What you'll end up doing is overpaying or underpaying. Well, you can't underpay. You'll end up overpaying or getting bad risk reward metrics because you're not actually adjusting based on the expected move. What we want to do is try to balance out our box based on the expected move and try to balance it in a small enough move, but a big enough ROI. And what we need is a month from now. So if you just draw a vertical line here on September 30th, right here, this yellow vertical line pricing to either be above here or below here. So if you think about it like this, here, we can go to a weekly chart, kind of see it a little bit better here. Okay, so on the weekly chart, this will all be winning, and this will all be winning, right? When it gets to this yellow line, this is your winning zone, this is your winning zone, this is your losing zone. Now, of course, price could grind sideways for 4 weeks. That would be bad shape for us. But more often than not, at least 1 week over the course of a month actually drives price directionally. If you use a target, I would use near the full value, because otherwise it's not really worth the ROI. But the nice thing with SPX or XSP, you don't really have to worry about assignment or anything like that. So I'm just going to let it go without a target. If we get a big move early, maybe I'll close out. I'll have some discretion there. Like, for example, if the first week of September is down 5% and I can get 490 out of it, well, then I'll close it. But if it's just kind of grinding, then I'm going to wait and hopefully get outside. And you can use the calculator to help you set the target on the exact pricing if you would like. Okay, looks like I think we're dead in the water on AVGO. I think it auto closed me on Bloom. Hit the target, got filled with a small loss, and then Tesla was my other big loser. Tesla actually looked good for a minute this morning. We almost stole 3 out of 4. Okay, so with Thinkorswim, what you do is you control click on one debit spread, and then you control click on the other side. The line in the sand here, Christine, would be either side. So it's green if it's above, it's green if it's below, it's a loser in the middle. So it would be below the put, Christine, because it's a debit put, above the call because it's a debit call. If you're doing credit spreads, it would be reverse of that, but we did debit spreads. So credit spreads would be the opposite, but we did debit spreads. I think you can trade the SPY until 4:15 even on Fridays. I'm not sure because I don't do overnight options on Fridays. I think you could still trade the SPY until 4:15 even on a Friday. Someone in the chat let me know.
Yeah, there's been a lot of talk back and forth on that with people saying you can take SPX and XSP after, from 4 to 4:15. I think you can only take SPY itself because the options aren't open past 4 o'clock. I don't think just the SPYs past 4 o'clock.
Well, yeah, I actually don't know because I don't ever do overnight options on Fridays, which is the only time that I'll be trading past the closing bell because sometimes I do get filled. Does anyone know? I can ask my dear friend ChatGPT if you guys don't know.
I don't think. Well, you could ask. I think somebody looked it up once to tell me that, and I think it's wrong actually, but
Oh, okay.
because I don't think any of the options market is open past 4.
Well, SPY, the options market's past 4. You can trade spreads on the SPY up till 4:15, but I don't know about on a Friday. Okay, so
Graham says he's sold them all. Yeah.
it looks like though you can trade SPX and XSP for following day's expiration after through 4:15. I haven't confirmed that for Schwab yet, but it looks like some of the brokers, as long as it's not that day's expiration, because that day's expiration is a true 4 o'clock expiration for that DTE.
Yeah. I never trade past 4, so I don't really know firsthand.
Dave says no. Interesting. Okay. Well, I'll have to figure it out. I've been wondering that for a while, but I've never actually done it.
I wonder if some brokers let you and some don't.
Yeah, definitely very possible. And now SPY, you can trade spreads to 4:15 during Monday through Thursday. I do that all the time. So, oh, look at this, Gina. Thank you. So, wait, Gina, is that right? Because I didn't even know the sectors were open to 4:15 now. Bob, sorry. Here's the trade. I posted it earlier. Probably got lost in the chat there. All right. Well, it sounds like we have. Gina says I'm always late. Sounds like we have a little homework to do just to try to confirm. I'm sure, regardless, it is somewhat broker dependent because brokers definitely have different rules. I mean, I just found out the interactive brokers will fill options trades at Sunday night, which I never knew. So obviously it's going to be somewhat broker dependent, no matter what. We'll figure that out. Okay, there's your two-way trade. We'll keep an eye on it over the course of the month. Remind me because I'll probably forget half the time. But we'll get that on. I think it's going to be a really interesting month. I think September is going to be a make or break month in some ways. So it'll be interesting. If it's at the same price, Lynn, Tuesday, absolutely no big deal. A box trade like this that we're playing for the entire month, you could trade it a week from now if it was at the same price. The important thing would be maintaining that same ROI on the trade. Obviously, with September, Graham has been banging the door down about some of the big seasonality stuff. So if you guys missed his presentation on that, make sure you check that out. I think we'll play it directly in here, so you don't have to go anywhere, and you can check that out. Otherwise, thanks for another great week. It's been awesome. Appreciate you guys. Even when Shotgun Thursday loses, I still have a great time, and appreciate everyone being here consistently. Also, we've got that replay page up and rolling now that a lot of you have been asking for a little bit more organized way to get access to that. So make sure you check that out. Otherwise, hope you guys have a great weekend and make sure you stick around just to check out the seasonality thing. Because I think we're also doing, I think Graham also has a special on it that either has some limited spots or time or something to keep an eye on. So stay tuned for that. Thanks, everyone.
Thanks, Nate. So before we get into the seasonality thing, the page that I'm showing you on the screen right now is our brand new replay page. It's got a few weeks worth of replays in here. This is the link now that used to go to the page that just had the one opening playbook, the one closing playbook. That link will now take you here. So just looking at just looking at that in the links here. Let me make that. Oh, you can't see what I'm doing, can you? No. Okay. So the links underneath the video in the announcement section where it says recent replays, or latest replays, NMC-replays. That link will take you here now. It's all very nice and neat and organized, and all new opening and playbook and closing playbook sessions will get posted in here. So now let's go to the seasonality presentation.
And the dates to look to exit. These are based on seasonal trends that happen every year after year after year for the last decade. They are very, very strong patterns. Obviously, we don't have a crystal ball. Not every trade is going to work out. We want to give you an edge in our trading. If you can't handle losing a trade, you probably shouldn't trade with real money. So just keep that in mind, guys. But we've been able to absolutely crush it. In fact, we're averaging 17% per trade. That's winners and losers average out on about an 18 average hold time. And we've been doing this for about 2 years now publicly. Again, since that April bottom, we're up about 1,200%. That's 1,200% total gains here with these seasonal picks. So here's the question for you. What would you have done if you knew that every year, starting on November 2nd, Costco options paid an average of 116%? And it didn't happen just once, didn't happen just twice, not even 3 times, but this happened every year for the last decade without fail. So every year when November 2nd rolls around, like it does on the calendar every year, all we have to do is open a basic trade, knowing Costco has paid out with 100% accuracy, always starting on November 2nd. Well, what would have happened this past year? Well, this past year on the options, 83% in 19 days. The year before, 113% on Costco. The year before that, 141% on Costco. Now, think about this for just a moment. That's 3 money doubling opportunities, all from the same stock, and all starting on the same day each single year. Now, you're probably thinking there's no way that this can be real. But as you'll see, many of today's best stocks have paid out on the same dates each year for the last decade. For example, Coca-Cola options would have returned on average 68% every year starting on March 19th. That's a seasonal date there. March 19th, ticker's KO. What about Walmart? That one pays 74% on average each year on July 1st. Ticker's WMT. Your entry date to watch out for, July 1st. What about Broadcom? This is AVGO. 87% return every year starting on October 11th, year after year after year. Now, that's why I call these unique dates the payday appointments, because they paid out year after year, regardless of market conditions. Bull markets, bear markets, recessions, it doesn't really matter. Just like with Google. This one's paid out an average of 79% every year for the last decade, always starting on January 15th. Like in 2023, you see an 88% return on the options, 2024, 66%. And this year, 61%. That's about a 2-week hold time. Same ticker, same date, same opportunity to profit. You just follow it over and over again. In fact, these payday appointments have helped me recommend many of my best trades this year, including 78% winner on MasterCard, 87% on Meta, 92% on Netflix. And they've even helped us add more than $36,000 to our model portfolio this year alone. And we're only a little over halfway through the year. So we're pacing great. And that's why I'm here today. I'm going to share some of my top stocks and their appointment dates free of charge. In fact, just grab a screenshot of this if you want to, but I'll get you a bigger list later where you can screenshot that. So my hope is that you can write down each stock that I share with you today, mark their payday appointments down on your calendar, and use that to target what could be some really great opportunities, just like with Lululemon. Now, most people don't realize, but Lulu options paid an average of 64% every year starting on May 25th. The stock has gone up every year for the last decade on that time frame. In fact, anyone who started with $1,000 in each day would be looking at $44,000 return today. Now, you might be looking at this chart and wondering why there's ups and downs. This is just a screenshot of Lululemon's chart. But if you only traded these dates we talked about, May 15th, held it for, or May 25th, excuse me, held it for about 2 weeks. And then other than that, you were out of the stock, $1,000 into $44,000. You see, once you have these payday appointments lined up, you don't need to do anything else. We don't have to bet on the earnings. We don't have to hunt for perfect entries. And we don't have to spend hours trying to decode technical patterns. In fact, we really don't need to do anything complicated at all. We simply wait for that payday appointment to roll around on the calendar, and open a basic trade knowing the stock is paid out with a 100% certainty over the last decade, just like what would have happened with Fortinet in February. Now, at the time, most of the tech stocks were struggling to stay afloat. Microsoft down 3%, Amazon down 9%, Tesla down nearly 30%. Ouch. However, Fortinet paid out every year, average of 68% on the last decade, always starting on February 1st. And this time it would have been no different. In this case, it didn't matter whether the broad market was bullish, it didn't matter what the headlines were saying, it didn't matter what the White House did next. We could have opened a basic options trade on February 21st and grabbed a 122% return just a few days later. In fact, we traded this in the opening playbook, if you remember back in February. Ticker's FTNT. We did it on a roundtable session as well. I got invited to that roundtable session. I said, this is a stock to trade. Now, what about last year? Well, let's look at 2024, 108% gain on the options. The year before, 153% gain on the options. But keep in mind, Fortinet wouldn't have just paid out for the last 3 years. It would have paid out for the last 10 years in a row. In fact, anyone who started with $1,000 each year on this payday appointment date would have grown their account to $59,000. Again, this is a chart of the whole stock. A lot of the times with these payday appointments, we're cutting out those drawdowns because we're just focusing on the most bullish times for that stock. So that's 59 grand, all from one trade per year. And that's why I want to invite you to target dozens of these payday appointments with me over the next year, starting with a brand new one that I'll be sharing this very week. And as you'll see, it's on a stock that would have paid at least double digit every year for the last 10 years. Now, if this is your first live class with me, my name is Graham Lindman, and I'm the senior options expert here at Prosperity Pub. Now, I've been an active trader and investor over the last decade. Last year, I grew my trading account from $25,000 to $75,000 in about 3 months. And this year, I took another account. This is my retirement account from $42,000 to $96,000 on stock alone. In fact, it's about $105,000 now. If I were to pull it up today, that's just trading the stock. Now, I don't say that to brag, but to show you that I trade every single day of the week. And some of my most notable winners include a 260% return on Reddit, 435% on APD, a very rare 563% on Cisco. Now, obviously, those are some of my best returns, and they're some of the top ones I've seen over the last few years. But please note, not every trade is that big. Not every trade is a winner. There's winners and losers. With any strategy, there's bound to be big wins, small wins, and losers along the way. And that's why we don't risk more than we're willing to lose. But if you follow my work, then you know that we like to keep things simple. That's why I've spent the last year teaching traders just like you how to leverage these payday appointments, because they played a big role in our weekly success. Just see from some of the top students. Daniel here, last pick was on Wing. That's Wingstop. Got almost 100% on that one. David, CCJ for 74%. Jason took an ANET trade, seasonal pick, 220%. Dad, ANET closed a little early, only got a 100% return. Jim so far made over $5,000 using this strategy. Thank you. David A is on target to make a huge return. This was last year. Now listen, not everyone is finding that type of success in their trading. You see, most people think that you need to use dozens of indicators to know when a stock is set to move. We've heard people swear by trend lines, Bollinger Bands, dozens of different moving averages. And while those indicators can work to some extent, they don't tell you exactly when a stock is going to move. Best case scenario, they predict a stock's move after the majority of returns have already been made. And that's exactly why we zero in on these payday appointments, because they can help us tell it down to the day when a stock is most likely to move. For example, let's look at Wells Fargo. Now, most folks don't realize, but the stock has made a sizable move every year on that April 17th payday appointment date. In 2020, the options paid 86% in 12 days. 2021, 42%. 2022, same story, 42% there. And in 2023, 133%. Last year, 105%. And this year, 72% on the options. In fact, over the last decade, Wells Fargo paid an average of 95% return on those payday appointments. Again, ticker is WFC. Entry date is 4/17. And that's the real beauty of using this strategy. We don't need to watch every market tick. We're not flipping through charts, countless stock charts. We don't need dozens of market indicators. We're simply leveraging a decade-long pattern that our research shows is hidden inside each individual stock. Then all we do is wait for that payday appointment to roll around and open a basic trade, knowing the stock would have paid out with 100% certainty over the last decade. Now, here's the best part. We typically get a handful of these opportunities each and every month, like the Spotify trade we took in May, 100% on eBay in June, 127% on JP Morgan in July. And these are real-time trades, guys. All of these trades here I'm showing you are based on our real-time portfolio results. So $1,000 into each of those would have been worth $6,270. Just 3 trades. That's 1 per month. Double your starting stake, you're looking at more than $12,000. And that's why I want to share this week's newest payday appointment with you. Now, obviously, I can't promise a future return, and I would never do that. But here's what I can promise. The stock we'll be targeting has performed incredibly well every year for the last 10 years in a row. Now, if you're skeptical, I totally understand. But let me show you how this is all possible. You see, it all comes down to the stock buying patterns of Wall Street. Most people think that Wall Street buys and sells whenever they feel like it, but that's just not the case. Wall Street follows an organized routine, buying the same stocks on the same dates each year. In fact, the data shows it's been happening for the last decade. Let's look at Amazon. Wall Street typically buys Amazon every year around May 25th, and this year was no different. In fact, this year, 58 Wall Street firms piled into that stock on its May 25th date. That includes Bill Ackman's hedge fund, which is purchasing Square, big banks like Bell and Community Bank buying Amazon, another firm that manages over $100 billion worth of assets. And now, obviously, you can see how the stock shot higher, and anyone who set up a basic trade would have seen an 88% return in less than a month there on the options. And keep in mind, this was not a one-time thing. This happened in 2016, 2017, 2018, 2019, 2020, and every single year for the last 10 years in a row. But keep in mind, this doesn't just happen with Amazon. It's happened with hundreds of well-known stocks, like Netflix. Wall Street tends to pile into the stock each year around September 23rd. And last year, 23 different institutions piled in, buying nearly 1 million shares in total. So obviously, with that amount of buying, Netflix surged higher. And anyone who opened a basic options trade on Netflix September 23rd payday appointment would have gotten 100% in just 14 days. It wouldn't have mattered if you started with $500 or $5,000. It would have doubled that investment just 2 weeks later. Now, that's money that could have beefed up the retirement fund, maybe help cover the cost for a trip to wherever you'd like to go. Maybe that's Italy, or maybe help cover a down payment for a fun car. It says a new car. I bought mine used because I like to save a little money there. But remember, this was not a one-off event. You can easily see Wall Street's footprints on each year starting on September 23rd, year after year after year, 2015, 2016, 2017, 2018, 2019. You guys get the picture every single year for the last decade. Actually, in total, Netflix would have averaged about 85% return on the options each and every year September 23rd rolled around. So anyone who started with $1,000 in each trade over the last decade would be looking at actually a 6-figure profit just from taking this one trade over and over again. And that's the real potential packed inside these payday appointments. Now, obviously, again, I can't guarantee what the markets do next. Things happen, markets moves. It's possible to lose money. I'm actually pretty bearish on the markets right now. But given the historical performance, we can actually filter through all the stocks and just find the ones that are expected to win way more than lose. For example, like Synopsys. Generally speaking, this is not a stock that I trade on a regular basis. In fact, you guys have probably been tuning in for a while and you've never heard me talk about this stock. But there's one thing. Wall Street tends to buy shares each year on September 29th. And last year would have been no different. Anyone who opened an options trade on September 29th would have seen an 80% ROI on this ticker. It's SNPS is the ticker. Every $1,000 would have turned into $1,800, $5,000 into $9,000. Now, obviously, that's a great return. And most folks would be thrilled to close a trade and see $9,000 sitting there. But just like with every example I've shared today, this was not a one-off scenario. Synopsys paid out 150% in 2014. Look at 2015, 2016, 2017. In fact, it would have averaged a 110% return every year starting on September 29th. Now, all we have to do is leverage the next one is wait for September 29th to roll around. Might want to write that one down. An open and basic trade knowing the stock would have paid out with 100% certainty over the last decade. Now, in just a moment, I'll set you up with everything you need to target your first payday opportunity. But before we get there, let me show you how we find the best stocks and dates to trade. Now, as you might expect, we're not doing this by hand. Instead, we're leveraging a unique piece of software designed to help us track and rank these payday appointments. It looks like this. Now, each week, it feeds us a short list of the stocks in their appointment dates, the dates where they've gone up every year for the last decade. But here's the key. The software will only show us stocks that would have paid out with 100% accuracy over the last 10 years. If it's failed even once, it's not included. It's off our list. Now, obviously, we don't trade just any stock that's on the list. I'm sure we could do that and probably be just fine. But thanks to this software, we can rank each stock based on its average return starting on its appointment date. So the stocks with the highest average return move to the top of the list. Again, we could trade every stock, but wouldn't you want to trade the ones that pay the most money? So the stocks with the biggest returns, top of the list. Stocks with the lowest, they go to the bottom of the list. And as you might expect, we only trade the stocks that pay the most every single year. And according to our research, the stocks with the highest average return over the last decade typically perform the best. For example, let's look at the last week of July. Now, if you don't remember, it was not a great time to be trading stocks. The S&P broke its long-term trend and the market shed roughly 10%. Now, typically when that happens, it's a bad idea to go long. However, our software marked H&R Block as that week's top payday appointment. In this case, it told us the stock had climbed an average of 6.2%. That's on the underlying stock, 6.2% every year without fail, starting on August 1st. And sure enough, this time around, it was no different. Anyone who opened a basic trade with us on August 1st would have seen 262% 2 weeks later. And keep in mind, this is not a back test. This is a real-time trade we took in the premium portfolio. Again, not a back-tested example. Our software actually flagged this stock in real time. I personally sent this opportunity to hundreds of our traders, and it's been our biggest payday so far. And it didn't matter that the market was crashing. It didn't matter that sentiment was bearish. H&R Block surged higher for the 11th year in a row, starting on that date. Just $5,000 into this trade would have turned into $18,000 in just 2 weeks. Same story with JP Morgan back in June. Now, in this case, the market wasn't in free fall, but the newly enforced tariffs create a lot of volatility, dragging the markets off of its highs. However, our software ranked JP Morgan as the week's top payday appointment. And in this case, the stock would have climbed on an average of 3% every year without fail. Again, the underlying stock for the last 10 years in a row went up. That's the baseline. How much did it go up? About 3% on the stock every single year on average. So once again, this year is no different. June 24th, the stock started its annual climb, and anyone who opened a basic trade with us would have seen 127% return in just a little over 2 weeks. So every $5,000 into that one would have turned into $11,350. And once again, I personally shared this opportunity with hundreds of my students in real time. My hope is that you'll be one starting today. In fact, over the last 2 years, this software has helped us identify many of our biggest winners, like Coca-Cola each year on March 19th. Made up 97% in 2 weeks on that one. PayPal each year on June 20th, 92% on the options on that one. Amazon June 16th, made a double on that one. And that brings me to the payday appointment we'll be targeting this week. If all goes as planned, this ticker should give us at least a double-digit return over the next few days. I say at least because our average winning trade has been upwards of 84%. So we're averaging almost 100% per trade. Now, obviously, I never promise a future return. However, many of our top payday appointments had led to actually triple-digit returns in less than a month. Shopify, 100%, EQT, 108%, Google here, 111%, Costco, 146%, AEM, which is a mining company, 185%. And again, real-time trades there. So starting today, you can start targeting these appointment dates too. It's all part of a special program that I call On the Clock Stocks. Now, as far as I know, this is the only service in the world that leverages these repeatable payday appointments and uses these options to really, really ramp up the gains. And despite the recent market shakeups, remember, crazy year this year with the markets going down 20% early on. Despite all of that, our model portfolio is still up $36,000 in 2025. That's based on starting with $5,000 starting out. So it's up huge this year. And like I said, we've been on an absolute tear recently. And the feedback from our top students, it's just been awesome. Ben, first 2 trades were both 100%. Jeremy says, the value of this membership exceeds a college degree. Dad did 100% on Dell. Howard says, takes a few minutes a week to get in and out. This program is excellent. Rod says, nothing better than buying around the same time as Wall Street. William says, thanks for the 100%. So if you'd like to join me, Deb, Howard, William, and everyone else, here's what you can expect. Each week, I'll run the software looking for the best possible stocks and find these payday appointments. And then my team and I will vet each opportunity going back as far as the last decade. Now, when we find the one that's worthy of our time, we'll send you an official trade alert. So you can typically expect 1 to 2 alerts per week with notifications sent via text and email. Now, that's at least 52 trades per year, all from stocks that have gone up with 100% accuracy over the last decade. Now, as you might expect, we'll be applying options to our trade as well. It's what's helped us achieve such large returns in such a short amount of time. Now, if you're newer to options, don't worry about it. I will list out the exact option criteria for each trade alert. That includes the ticker symbol, strike price, entry expiration, and everything you need to quickly follow along. There's no guesswork there, no confusion. With just a few minutes each week, you can enter these trades on your computer, cell phone, or tablet. Like with AEM in December. Anyone who popped in the option criteria for this one, they would have done quite well. In fact, 55% return on this one over about 2 weeks, starting on December 20th. That's a $2,750 return, assuming you start with $5,000. And like with every alert, you'd have known exactly when to get in and when to get out. But that's not all I have for you today. You'll also be getting access to the live published trade tracker. And inside, you'll find every trade I've posted since we started this program, including 87% on Meta, 92% on Netflix, 262% on H&R Block. Now, my hope is that you can look back at all of our trades and share your experience like many of our top students. David here, on target to make over $500K this year between 2 of Graham's programs, on the clock stocks and perfect Bitcoin. Lifetime memberships were paid off with the first trades. Howard, I took Graham's trade on Wing, purchased 5 calls, sold them, 31% gain, made $1,200. Pearl said, just started and I'm already impressed with the gains. Keep it coming. Now, obviously, everyone's experience will be a little bit different. But to help you hit the ground running, I'll also send you the complete on-the-clock stocks masterclass. Inside, I'll walk you through the entire strategy, step by step. I'll show you how we select each stock and then how we apply the correct options criteria. And by the end of the class, you'll be ready to target your very first payday appointment. But that's really just the beginning. You see, every month, there are dozens of these payday appointments to trade. That's why I'll also send you my personal calendar. This is the on-the-clock stocks calendar right here. Each month, I'll load it up with my favorite stocks and their upcoming appointment dates. You can think of this as additional opportunities that you can target on your own. Now, all you have to do is wait for that date to roll around and open a basic options trade, knowing the stock has spiked, spiked with 100% certainty over the last decade. I thought I had a sneeze coming there, but it fooled me out. Now, many of our students take these trades on a regular basis. Of course, you can do it with stock or you can do it with options. Of course, I teach you how to do the options. So if you want more and more opportunities, this is a great way to get rolling. For example, like with SE on January 21st, you can see it's marked down right there. Anyone who opened a trade on the 21st would have seen a double on their investment just 17 days later. Now that's like turning $5,000 into $10,000 right away. And with dozens of opportunities like that each month, it's easy to see why the normal retail price sits at $4,995. And if you logged into the official website, that's the price you would see. Now, I think it's worth every penny, especially when you consider everything you receive today. You're getting, at least one a week, normally 1 to 2 a week. You're going to get the calendar, so you get even more opportunities there. The live trade tracker, the masterclass sessions, and many of the other bonuses I haven't even mentioned yet. But today, I'm going to do something special for all the new members who are here tuning in right now. You see, the latest research shows that when the S&P performs well in May and June, like it did, the market tends to finish a year higher. Well, that means if history repeats itself like it has for the next 40 years, it could amplify the returns of these payday appointments, giving us a chance to see much bigger gains on our trades. And let's break this down a little bit further. Again, we know that September is a little bit rocky for the S&P. There are individual stocks that absolutely launch in the month of September. We're going to be trading those and cutting out the garbage. And then let's look forward to quarter 4. here, October, November, December. That is the most bullish time to be long stocks. So that's when we're going to get that extra wind in our sails, and I don't want you to miss out. That's why if you join right now, we'll immediately shave 50% off the retail price. That's half off. So instead of being $5,000, we're looking at $2,497 today to join. But that's not all. As a little bonus, I'm just going to cut an extra $1,500 off the already discounted price, meaning you can gain access to the full year of the On the Clock Stocks package for just $997. But we can only promise this for the folks in the door today. You guys know we sell out quick. So if you're ready to trade this week's payday appointment, guys, click that link that we're going to post for you guys, prosperitypub.com/PDA. It stands for payday appointment. Only $997 for today's newest members. Again, you can also click that link in the chat or give us a call, 904-706-3537. Once you click that link, you'll see everything you're entitled to as a new member. Again, you can call in if you prefer to speak to a regular person. But get this, guys. Everyone who joins today will gain access to our next payday appointment. And not just that, you're going to get the full year of trades plus a massive $1,500 discount. So it's only $997. And this is the On the Clock Stocks program. So if you haven't grabbed one of the discounted spots yet, go to prosperitypub.com/PDA. Now, I can tell you that this is one of my favorite strategies to trade. In fact, if you've been following along, you know this is one of the bases of everything I do here. Let's look at this. Our model portfolio is up nearly $40,000 this year. Again, I told you we're on a crazy hot streak right now. I just looked. 20 of the last 26 trades were winners. We are killing it. But let's look at this even further. Our total portfolio, again, we've been doing this for about 2 years. It's cracked the six-figure mark in profits. So it's not just that we're crushing it recently. We've been doing very well over a long time. That includes 70% on SMH, 111% on Google, 100% on DocuSign. So if you'd like to trade with us this week and every week moving forward, guys, click that link in the chat. On the Clock Stocks webinar attendee special. Again, 1 year, $997. On the Clock Stocks, 2 years, $1297. It looks like that deal is going away soon. So how much does it cost to take the average trade? Well, it only costs about $250 to trade. So you don't need to have a massive account to take advantage of these opportunities. Let's look at the trades in July here. You can see each one would be about $100 or less. There's one that was $270, but look, BK 50 cents, Walmart 95 cents per trade. Again, you can trade as many or as few options as you like, but look, they're very, very affordable. And this one is 70%, 111%, 100%, 85%, 110%. What type of account do I need to trade these on the clock stocks? Well, any regular account works. You can obviously trade the underlying shares, which have done very, very well, or you can trade the options with me. What if I've never traded options before? Well, once you log into the members portal, you can easily access that masterclass training to get an instant head start. However, if you need additional assistance, I'm going to give you access to the customer service room. You can join 5 days a week from 10 a.m. to 1 p.m. Eastern. They're live in a Zoom room and receive dedicated help from our customer service team. What's the next pick? Well, only today's members will get the details of the stock along with the exact setup to trade for the stock and option. Will I get access to the stock tracking software? Well, sadly, we can't share access to that, but you'll be getting the best setups from the software over the next year. Like we saw with Google right here, January 15th. Great average return. I sent out the alert like I always do, and 61% return on investment there. That would have flipped $5,000 into $8,000. Now, if you're having reservations, I get it. Trading the same stocks on the same dates each and every year, that's not necessarily a normal thing to do, but it's hard to argue against a decade-long pattern of success as shown by the data. Plus, I think the numbers speak for themselves. That's why I want you to trade these payday appointments with me for the next 14 days. And if during that time you decide it's just not for you, you're not loving it, don't worry. We'll send you a refund. No problem. Call our team. We'll get you taken care of. Although I would be surprised if that happens because 2025, we're off to our best start yet. In fact, we've averaged almost 2 triple-digit winners a month since January. Think about that. We're averaging 85% return per trade, but we're actually getting about 2 over 100% each month. So if you'd like to join for the next one, click that link in the chat. So the way I say it, you have 2 choices. You can take the 16 stocks I shared today, take those appointment dates and have fun with them, run with them. Might as well take a screenshot of this slide right here. Broadcom, October 11th. Southern Energy, October 8th, AM, December 20th. You guys get the picture. Truthfully, you could take that and do probably quite well. After all, each stock has gone up every year on those appointment dates for the last decade. But if you want even more of these opportunities and you want to supercharge them with options, well, you need to go ahead and join me and the hundreds of other folks in the On the Clock Stocks program. So if you haven't clicked that link in the chat, do that now, or go to our prosperitypub.com/PDA. Now, this is important here. And we like to do these kind of specials for you guys. Once you have joined, once you've taken one of those limited spots, don't close out the next page. That's because on that next page, there's an opportunity for you to get lifetime access. It's a special upgrade that you can lock in lifetime trade alerts as long as I publish them without paying year after year. No annual renewals, no recurring charges, no maintenance fee, free and instant access to any and every update that I add to the program. And if you get to pass your login credentials off to, you get legacy access if you'd like to. So you can pass off your login information at any time. If you want to get that lifetime, you can pass it down to your friends, grandkids, or your spouse, whoever. So click that link in the chat to get started and become one of my next students. William B, 110% on NVIDIA. Kathy made close to $15,000 in the last 3 weeks, made $3K using today's trades. Pearl C, $405 profit. Keith, $1,200. James, up a little $10,000 on a pick. Benno, $2,800. So if you have any remaining questions, I will address them now. Of course, David, I don't know if I can see the chat from my view right now since I have this in full screen, but if you can jump in here and fill me in, that would be awesome.
Absolutely. Let me get my light on here so you can maybe see me. Great presentation as always. This program is so cool because it's just amazing how far back the recurrence goes. Like, you're not doing this because it happened last year or the year before. Like, this is decade worth of repeat action on the same date, and knowing that gives everybody a lot of confidence that these are going to go in the direction we hope.
Yeah.
So one of the questions is,
are
we trading stocks, options, spreads? Like, what are we doing here?
Yeah. So obviously, guys, we're looking at the underlying stock. We always start with the stock for our strategy, and then we apply options from there. So you can trade the underlying stock. You can trade a call option on it, or the options that I give you. Now, that could sometimes be a basic call. That could sometimes be a debit spread. As you guys know, if you've been following along in the opening playbook, you know the risk to reward is just so crazy good on those debit spreads, those wrap orders, that I really like to apply them to most everything I do. You offset time decay, you make it cheaper, you have a better weight, all sorts of benefits. So of course those types of trades will be included in the membership.
And you go over with people in the training about handling the exits, right?
Oh yeah, the exits, I actually send you an exit alert. So it's not like I just give you an entry alert and let you fly. I'll send you an entry alert and an exit alert. Actually, the cool thing is I send you the entry alert the day before we take the trade, so that you have plenty of time to get in. So like, for example, I gave you guys GILD, Gilead, is on a profit date for today, starting on today. I think it's a 3-week hold time. Couple fun facts. You would have gotten that yesterday, so you can take it today. And if you were curious, the markets are down pretty good today. Gilead's actually up right now, believe it or not. Just kind of how it tends to work.
You can win in a down market on occasion.
Yeah. No, you really can. And focusing on the right stocks at the right time, these seasonal trends let us look under the hood and kind of see what's moving and what's not. It's really cool.
So when do people usually get the calendars for each month?
Right at the end. So you should be getting the September one. I believe it's already posted, actually, the full September calendar. Let me go ahead and take a look just to verify. I know the design team sent back that pretty image for us, but it should be already posted. Let me check. It's not posted yet. It should be up today.
Usually a few days before the end of the month, right?
Exactly.
And how often are the trades?
We get about 1 to 2 per week. Just depends what's up
by week, right? Because you
can't
get this, guys, schedule of when things repeat, but
right. If a stock comes up, just because a stock makes it on our dashboard doesn't mean we're going to trade it. If a stock pops up and it only averages, I don't know, 0.02% each year on the underlying stock, that's just not a juicy opportunity. We want to see them that are going up 2, 3, 5% on average each year, so we get that real big win in our sales.
Awesome. All right. So just to repeat, because a couple of people are asking about pricing. So we have it's going to be $997 for year one, or you could get the second year for an extra $300, $1297 to do the 2 year. But that 2 year deal is expiring tonight at midnight. So tomorrow morning you will not be able to get the 2 year deal. It'll be $997 for 1 year. And of course, this is a webinar special, so this is only for a limited time anyway. That $997 is going to go up in the near future. And I didn't post this in the chat, but I'll do it now because I was just busy answering people's questions. But we do have the lifetime option. It's an additional $797 on the 1 year or $497 on the 2 year. Either way, you're all in for the lifetime for $1794, which means for $1794, you don't have to worry about renewing this. You don't have to worry about it expiring. It is going to, you're going to have it for life. And with our VIPs, you don't have to worry about, if you decide to stop trading this and you want to pass this on to somebody else, you can do that as well. So if you decide to stop trading or you want to leave this to somebody in your will, these VIPs are transferable. So there's that as well.
Yeah, I didn't even know we were doing that 2 year deal. That's pretty awesome. $1297 for 2 years. That effectively takes the price down to $650 a year.
Yeah, that's crazy. That's crazy. And you're getting a couple of trades a week, 1 or 2 trades a week. You're talking about 75, 100 trades. You're talking about like $1 a trade,
Right.
or $10 a trade rather. Yeah, that's crazy. Let's see. All right. For those who want a replay of this, you can direct message me your name and email address, and we will send you a link to the replay. Just keep in mind, you may get that replay today or may not. I'm not sure how quickly this will be up because this is a brand new presentation on this program. We may not have the replay up in time for you to take that 2 year deal. So if that's your goal, you may want to consider that. But we will get you a replay if you send me your name and email in a direct message. We will get that out to you as soon as we can. All right. I posted the VIP information already. And of course, these are on, like, this could be any given day of the week, any given week. It could be a Monday, it could be a Wednesday, whatever. It doesn't matter, right?
Yeah, any day of the week. Again, that I just talked to the team. The calendar is going up right now, actually. So you'll have the full September outlook already mapped out for you. It's pretty awesome.
Cool. All right. I think those are all the questions that were posted in the chat. I think you covered a lot in the presentation.
Yeah, and I'll if you can take the screen share over, so
yeah, will do. Give me 1 second.
Just give me the heads up when I'm good to swap mine out.
Yeah, give me 1 second.
And again, guys, we will be live. Well, Nate will be live at 3:30 this afternoon for the closing playbook. You don't want to miss that. Let me see. Yeah, I got to figure out how I can access the chat for this. The list of stocks, guys, I'll show you. The list of stocks we talked about today. Here you go. Take a screenshot of that. We'll be trading them too.
All right, I'll give them a second to do that, and then I'll grab the screen.
Cool. All right, we're going to give a count of 5, 4, 3, 2, 1. All right, take it away.
All right. Thanks a lot, Graham. I'll stick around in case anybody has any remaining questions, wants to send in their email address and all that. You go do what you do best, which is trading and looking handsome.
Yep, I got to get some alerts out. Thank you.
All right. All right, folks. So just to recap here, let me just see if there are any messages in the chat while I'm doing that. Of course, lots of email addresses. Now I have to parse through all that to find questions, but let me see. All right. Okay, cool. So you'll get at least 52 trade alerts per year. Honestly, it's probably a little bit more than that, but we know you'll get at least one a week on average. You get the appointment calendar, you get the stock and options criteria so that you can take those trades either way you want to do it. Of course, there's the master class. There's plenty of training and everything in the members area for you to watch as soon as you join. Of course, we have the 14-day money back guarantee, all the discounts that you're getting for today, the live trade tracker, and of course, all the things we normally give with all the programs from Graham, which is going to be the email support, phone support, customer service live sessions, 3 hours a day, every trading day of the year. And, all the other various things, like all the stuff that comes out via email, via Telegram, opening playbook, closing playbook, all that kind of stuff, obviously, you can still do. So a lot goes into this. And the record of these happening year after year after year, sometimes it's hard to even figure out exactly what the trigger is, but it almost doesn't matter even if you don't know why something's happening. If you see it repeating year after year after year, I mean, sometimes it's obvious, sometimes it's very cyclical, sometimes it's, their reports, sometimes it's whatever, but it doesn't even matter. You see something happening, 9 out of 10 times in the last 10 years, it's a pretty good bet it's going to happen again. And, that's what we see with all of these. And of course, on top of that, Graham's only going to put out the alert if the market conditions really look primed. And if let's say, he's not going to put out an options trade if the options pricing happens to be bad at the moment or something like that. So you've got not only the history of all this happening with these tickers on these dates, but then you've got Graham's analysis of that company, that stock, and the current market conditions on top of that to give you further confidence or give you a warning that maybe, we're not going to take the trade today because of this or that. So you've got all of that kind of going for you to give you more confidence in taking the trades based on the cyclical nature of this. And that's really cool. You don't usually have, when you take a trade, you might know a little bit about the company, might know like a little bit about what's going on in the market conditions, and you might be doing it based on, what you expect to happen in the next day or two. This is a really different way of looking at the market and looking at how to trade something just based on repeat history on a particular date for a particular ticker. And that's really something different than what we usually have on a stock, right? We go to trade, we did a bunch of trades on Friday last week. We didn't have that exact trade working for us every year for the last 10 years. No, we were doing it based on what we saw, in the chart at the time. And this is just a very different way of trading, and obviously has been successful for Graham. And knowing that he's going to basically pull the plug on it if like there's a red flag this particular month or week because the conditions aren't right, gives you a little bit more confidence that, okay, well, we're really only going to do this if it really looks good. And because of the cyclical nature of it, it tends to look good, but you still have that safety net. So cool stuff. All right. I'll give anybody who didn't put their email in here another minute to do it, and then we'll go ahead and close it out. We will be back in about 4 hours for closing playbook. Come a couple minutes early if you want a preview of what we're going to cover and any other information on some useful links and things like that. We will do a little bit of a pre-show about 10 minutes early, 5-10 minutes early on closing playbook. And then I know we're going to talk about those box trades that Nathan talked about yesterday and a little bit this morning he previewed, but we're going to talk about those box trades again in closing playbook. So, in a lot of the spread trades, like the vertical spread trades that Nathan and Graham take in their programs, it's not every single program, but a lot of the stuff they do are these vertical debit spreads where we have two different strikes and when we're going bullish, we win if it's above that line in the sand. If we're going bearish, we win if it's below that line in the sand. With the box trades, we win if it's above a certain line or below a certain line, and only lose if it closes out in that gap in the middle. So it's kind of like a two-way trade in a sense. It's a little different than the way the two-way trades are set up, but it's covers you in both directions. That's something that he went over yesterday, something we're going to go over again today in closing playbook. So if you are available, go ahead and show up for closing playbook at around 3:30 p.m. Eastern time today. Let me see something here. Sally. Yeah, Sally, I'll direct message you in a second. But the short answer is, or it looks like I answered you already. You can call the phone number on the screen, Sally, and get a reply to, or get an answer to your question. For anybody who wants a recording of this, like I said, we will send out emails, but you can also find a replay of this in about an hour or so at the link in the helpful links, the last opening and closing playbook replays, the marketspg.com/NMC-replays. It'll be posted up there as well. But we will also, if you sent me your email address, we'll also get an email out to you. All right, folks, I think that's about all we have. Actually, the chat will stay open for a few minutes. So even after I close out the webinar, if you want to drop your email address in the private message, I'll grab it. All right. Have a great rest of your day. Good luck in your trading. Hopefully see you in the closing playbook in about 3 hours. All right, folks, that is the presentation on the clock stocks. 52 trades minimum. You probably get more each year. $9.97 for the first year or $12.97 for the first 2 years. That $12.97 deal will expire tonight. And then on page 2, you can upgrade to the lifetime. Whether you took the 1 year or the 2 year on the first page, doesn't matter. Your all-in price on the lifetime winds up being the same. It's $17.94 all in on the lifetime. And we got a couple people's email addresses. We'll be getting a replay link out to you. But of course, everybody can actually see the replay of this in the closing playbook replay page, which is underneath the presentation in the announcements. So you can go there for the replay in give it an hour or two and it should be up. All right. I appreciate everybody being here, sticking around to the end. We will be back tomorrow morning, 10 a.m. Oh, not tomorrow morning. That's silly. Not only is tomorrow the weekend, it's a holiday weekend. So we will not be back until Tuesday morning. But Monday morning, in place of opening playbook, Tom Busby will be doing a special session. And our team will be sending out the reminder that you normally get for opening playbook with a link to Tom's session Monday morning. So if you still want to get some education and maybe hear from somebody you haven't heard from before, Tom Busby is one of our most senior traders here, and he has been doing this for decades. And he's got a special presentation for you on Labor Day morning. So still, if you looking for something trading related to do on Monday, even though the market's closed, keep an eye out for that. What would normally be the opening playbook alert will give you a link to Tom's special event Monday morning. Otherwise, have a great weekend. Have a good holiday. And we'll see you Tuesday morning at 10 a.m. Eastern time for opening playbook.